This is Broke Money Hustle. And now, here's Broke Money Hustle with Trico and Eric.
Good morning. Happy Saturday to everybody who is joining us, listening. We are live on YouTube and we are live on Facebook, Broke Money Hustle. And we'd love to have you in the comments if you have some questions about some of the things we talk about. And of course, this is Broke Money Hustle, the podcast for regular blue-collar folks that are trying to change the way they live their lives and start saving money, start paying themselves first. We're all about the side hustles here as well. And we try to get interesting guests on to talk about their various side hustles and how they invest. And I am welcomed by my co-host here, Trico. How you doing this morning?
Doing pretty good. Last week seemed like a pretty good week in the market. You know, a lot of things seem like they're up. So that's always a good thing, always a good sign.
Yeah, I had a couple of really good winners, and IDEX ticked up a little bit there. So that's a good thing. We'll talk a little bit about our stock picks here later on in the program. Mm-hmm. And that's kind of what we do here is like we decided to change our lives, stop living the poor lifestyle, the paycheck to paycheck mentality, really start investing in ourselves. And that meant investing in stocks, buying gold and silver, taking on various side hustles, trying to get multiple streams of income going. Those are the types of things that you really have to do to get ahead in this world, because we live in a doer's economy, and we're learning as we go along. We have a lot of interests in hoping to get to higher levels. Like I know Trico and I both have an interest in getting into the real estate game later on, mm-hmm. But you got to take baby steps. And we thought learning about the stock market, how to invest would be a good first step. So we trade with Robinhood and Webull, and I have a TD Ameritrade account that I just have some penny stocks in that keep losing money, but it's been an interesting journey so far, and we decided since we were just hanging out and talking about what we were doing that we'd start a podcast. So we want to welcome everybody who's listening, whether you're listening on Spotify, Google Podcast, Apple Podcast, or on the IndieVolt network. We want to thank you for checking us out and hope that we're entertaining and informative. But please, we're not professional advisors. This is not financial advice. If you have some questions like that nature and you really want some serious answers, find yourself a financial advisor, someone who is a professional at managing money, and go from there. That is our advice. All right. So, TJ, what do you got for us this morning?
Let's see. You want to go into stock picks, or we had some pretty interesting articles during the week?
Yeah, there was a different strategy that came up. I was reading, and I can bring this up here about Netflix. Netflix had a little mini crash, mm-hmm. and it was all based on its earnings. And before the little mini crash, this article broke on MarketWatch. Says Netflix stock options traders are ready for a big move after earnings. Straddles imply the stock could either soar or tumble by almost 13% on Friday. Now, that's a term I have not heard in finance, straddles. Did you do a little research on this?
Yeah. I have a learning the lingo that eventually will be posted on our social media as soon as I get my new cell phone to work. But yeah, straddle is basically it's a neutral options strategy that involves simultaneously buying both a put option and a call option for the underlying security with the same strike price and the same expiration date.
Okay, there's a lot to consume there. So we need to kind of break it down to a call and a put. You're basically so with a call, you're basically thinking the stock's going to go up 13% in this case, and a put, you're thinking it's going to go down.
Yeah. Basically, it's I'm still trying to kind of get the nuances of it myself, but basically that's what it sounds like. Is you're saying, hey, like you have a certain median of where the money needs to be, and you're saying if it's at this point, like I don't know, like 350, buy it. If it gets to this point, like 450 or something, sell it. It's like almost like a median of where the money is. There was a video I was watching. I wish I could pull up the some of the graphics they had on there, because it kind of made it make more sense than probably how I'm explaining it. But yeah, basically you kind of have like a certain spot between buy it and sell it, and you're kind of just putting both of those out there at the same time. From what I understand, it's still a new term to me, and like I've in Robinhood I've put some some commands to buy, like, hey, if it gets down to $34, I want to buy a couple shares. And I've even put in things where if it gets up to a certain price, to sell it. So I think straddling is pretty much a similar thing to that. They also have when I was looking at it, they also have something where you can sell your call option to someone else. So it kind of gets it more complicated and muddies the waters, but basically it's just a point where you want to buy and a point where you want to sell, and you're just kind of straddling in between there, trying to make profit on it, usually around 20% profit.
Yeah, and I've seen some people who have posted on the finance Twitter world where they've sold those calls or those puts, and they've made some really good money. So it's definitely something that I think we need to learn a little bit more about. I know for myself, I don't want to get anywhere near options trading until I've done it paper trading and seeing if the education is starting to pay off first. Because I know with options, in some of our past stories, especially about that poor gentleman that commits suicide, that's where you can really lose a lot of money because there's a lot more risk involved. I know for options, you're on the hook for at least 100 shares. So depending on the price, I mean, you're priced out of most stocks for people in our income brackets at that price, except for penny stocks.
Exactly. I think that's why a lot of the times when I'm trying to wrap my head around like things like straddling and stuff, because my gut's telling me no, stay away from options. So it kind of muddies up my thinking, because in the back of my mind I'm like, don't even look into it. Only buy what you have the money to.
Yeah, no kidding. On my Webull account, I'm not even approved for options yet based on my risk assessment. Because when you sign up for Webull, you go through this little answer these questions. Okay, well, based on your answers, we don't think you're ready for options trading. Like, okay, no doy, as we used to say as kids. Okay, so in the bottom line of this article, it says, based on the current price of $518.07, Netflix's stock would have to close Friday above about $584.38 or below $451.76 for the buyer of a straddle for Friday expiration to make money. So it seems like basically what this straddle is allows them to make money either way, as long as it goes above a certain percentage point.
Yeah.
Which it just boggles my mind how somebody can make money off of a stock going down.
Yeah, that's another thing I couldn't figure out. I'm like, it just seemed really counterintuitive to me. I'm like, how do you make money if your stock goes down, unless you're buying it on the down? So yeah, I definitely gotta do some more kind of research into straddling, because a lot of people use it, and it seems to work for them. But I think I'm a few years away from doing it myself. Yeah,
it's one of those things where you definitely want to make sure you can afford to do it. All right, so I'm looking at Netflix right now, and it's currently trading at $490.75. And if we look at what it did on Friday, see, Friday was the 17th in the morning. Let's see, where was its close? So that would be 8 p.m. I'm looking at the chart here.
Yeah. So all the straddlers didn't make any money then, right? Because it didn't go below 451, and it didn't go above 590 or 584. It was right around like 490 when it closed. So anyone straddling that probably lost out on Friday, then, it sounds like.
Yeah, I mean, that's what I would surmise from that too, because it didn't hit above either one of those points. So did that mean that they didn't lose any money either? Like, was it a break even play, or because when you buy a call or a put, you're on the hook for 100 shares based on whatever price, because it's like you pay like whatever the contract. There's a contract price like 35 cents per share, let's say, and it's on your hair for 100 shares, so that's already $35 in your investment. And then these are big money plays, because you imagine 100 stocks, 100 shares of Netflix,
Yeah.
that's some serious make or break coin.
Yeah.
But so it's pretty. And again, this is why we're not financial advisors. This is why we're trying to bring our listeners along on the learning journey. And if you know more than us on this and you're listening, please hop in the comments and chime in, because this is kind of what we're all about. We're both educators in our day job and past experiences. I know TJ's got multiple degrees, and I know I've got a master's in education. So we're all about learning and teaching, and you got to learn it first before you can teach it. Isn't that right?
Yeah. Ideally, yes.
Although I have found in some of the classes I've taught in the past that the necessity of teaching, you end up learning more as you're going along too.
Yes, definitely. I had one time I had to teach an art history course, and I don't know that much about art history. I knew about history, so but yeah, I didn't know anything about art history. So that was one of those where I was definitely reading and doing all the research right before I'm getting up to teach it.
Yeah. Looking at my own Netflix investment, I don't have a full share of Netflix. This is one of those things I was slowly putting money into, like a bucket, to eventually get to a full share. I'm up about $12 still in Netflix, so
Nice.
the drop didn't hurt me. I know it peaked. Let's see, looking at the 3-month here on the Robinhood one, it was like it peaked at about 570, and its little plummet was from 526 to 490 on between Thursday and Friday. But it's still trending upward. This is the nature of stocks, is you're going to get. Let me bring it up the 5-day for everybody that can see it here. So you can still, let me go to 3-month. As you can see with the 3-month chart, it's still, it's a rocky hills and valleys, but it's still largely trending upward. And then we have there's our drop right there. It doesn't look serious looking at it here, but again, if you're, a high roller with lots of shares in it, that's quite a bit of coin if it drops that significantly. So I guess what people are doing is they're just trying to constantly hedge their losses or their profits so that they come out ahead either way. And I guess this is why day trading is a full-time job, because you've got to constantly look out for these things and be constantly like reading, doing your due diligence, reading up on the company, seeing what's going to happen. And this was all based off of their profit report, where it looks like their subscriber base is kind of starting to fall off. Like the growth of subscribers is trending downward now. And that was a signal that a lot of people were selling, I guess, at that point. So that drove it down.
Exactly.
Interesting to be sure.
Yeah, definitely. And I think during the the current stay-at-home orders and everything that are affecting a lot of states, probably a lot of people had Netflix, and then they binged everything they wanted to watch, so then they started buying other streaming services, and so that might have affected how many subscribers over the last 3 months.
Yeah, and another thing you got to think too is that since Netflix is part of the S&P 500, when it goes down, it drags down the S&P 500. And this article points it out too. There was a 0.8% decline. I mean, again, these numbers don't sound big to us, but when you're dealing with large amount of money, 0.8% could be thousands of dollars.
Exactly.
So that then it becomes worthwhile to look at those small percentages. And that's why a lot of the people we follow on Twitter, they're in the penny stock game. They're looking for those stocks that are 15 cents, 20 cents a share, and they get into it and they play the long game. I had a really good really good experience with that recently. I had originally bought into Boxlight. I'll bring their ticker symbol up here. And it's ticker symbol BXL, I believe.
BOXL, right? BOXL.
Yes, BOXL, Boxlight Media. Now, what Boxlight is, this is a Georgia-based company, and they are focused on online education tools. And where's the? Didn't give me the thing. There we go. So it's currently trading at $3.48 a share. Now, I didn't hold when I originally bought it at 84 cents. This was one of those stories where you kind of regret selling it. I did sell it for a profit. I sold it at like 97 cents a share, I think. And I was reasonably happy. But then like the news of this company kind of went away. And then it started picking back up again. And I watched it hit $1.70. I was like, you know what? And then looking at some of the DD that was being shared throughout finance Twitter and doing some research on my own, it looked like it's got a pretty strong company with some good, strong backings. So I jumped back into Boxlight, and it's been a great run. It went up to $4.55, and so really, really good return there. I didn't sell. I'm holding on to it long because it does look like another one of those that could be, north of $5, reaching up closer to $10 at some point. So I guess if we're just going to go ahead and move into our stock talk, this is another date for me. I'm giving her a second chance and seeing how it goes, because we do live in an environment where online, because we thought we were going to open back up again, and that's probably why the news kind of closed down, since they do online education. But now it looks like we might have to close up shop again, or some states are, these services. And they just recently have a partnership with Samsung. So, that when they have those press releases like that, it definitely helps the stock tick up. So, this is one that I'm re-dating again, and fun times. As far as to say anything that I'm kind of married to, I'm married to a lot of the stocks in my portfolio just because these are companies that I use, that I like. And I'm still definitely married to the notion of the fun utility vehicle, FUV. This is a stock that we looked at earlier, Arcimoto, or Arcimoto, I'm sorry, because I watched a video, and that's how the president of the company was pronouncing it. So it's Arcimoto. And they're currently trading at $5.75. And this was one for me that, even though it's down right now, I'm still in profit. They're down around close to where I bought in, so I don't have very much. So this is a good opportunity for me to buy more shares, because they're down close to my jumping on point. But they had a high of $8.35 on July 6th. That was their all-time high. So there's plenty of room for this company to go. And if you want to look back a couple episodes when we talked about it, but basically they make EV vehicles for delivery and like city services and stuff. They have a paramedic model, they have a delivery van model, and they're just they're two-seaters EV vehicles with a very long range. They can travel on the highway. And we kind of speculated how cool it would be if some place like Walmart, which is adding Walmart Plus, and they're trying to do their same-day delivery of groceries and some home goods. So this would be a great use case scenario for Walmart to do a fleet of these for grocery delivery. And that would be, that's 20, and the long-term look from the video that I watched, 2021, 2023, that's kind of like their short-term expansion goals. And they've got orders, and they're filling the orders, but they've had to scale back because of the Rona, their production facility. So they're looking at starting to deliver. If you pre-order now, you're looking at 2021, middle of 2021 before delivery based on their production schedule. So some hiccups. That's probably why the stock's a little bit down. But I think this is a long hold for me and something that I'm going to keep loading up on, because I see this, kind of similar to Square. Square was an initial investment for me at $11 a share. I only bought 10 shares of it, but it's trading at 120, as high as 130 now, which, I'm thrilled about. But, you look at this innovative company that's created something that everybody uses, that I was using. It was creating a space that hadn't been created. It made it easy for people to accept credit cards and debit cards for things like comic book conventions and flea markets and trade. And this was usually a technology that was really high priced. You had to go release the unit from the bank, and you were paying crap tons of money for that. This was such a low entry point that it made entrepreneurship explode. Beautiful thing. Now, this is not quite a lateral move with Arcimoto, but this is another thing that I see as being culturally, especially in big cities, the necessity of fleets of these small agile delivery vehicles, kind of like, how you see in Asian countries with not the junk, but the little cart that the guys grab and.
Oh yeah, the rickshaws.
Rickshaws, yeah. So this is like an EV rickshaw, but it has applications for delivery and stuff. And I think it's going to be, as EV technology has finally become useful, it's still expensive, which that is coming down now. I'm really looking forward to Tesla's Battery Day, because that's gonna probably bring huge innovation to the EV technology base. But the fact that you can have a nice fleet of these, and we've already seen good adoption of city centers with the little scooters for just pedestrian walking. Well, I mean, we're living in a new delivery culture. I think Rona is going to be with us, or I saw a Twitter post where somebody was quoting something from Bill Gates saying the next virus is going to surprise you, like he'd already planned it out or something. So where the delivery culture, the point of that little conspiracy theory there is I think delivery culture is going to stay where it is. I think you're going to see places like McDonald's and Taco Bell and fast food chains eliminate their dining rooms altogether. Like the ones that have them now probably will go back to using them, maybe. But if they're building any new stores, they're probably going to be delivery only. I've seen some Pizza Huts, no more dining room. It's just pickup or delivery only. And I think that's a business model that's going to make them more profitable. And it's just going to be a way of life that sticks around. What do you think?
I agree. I think we're kind of seeing like a huge change in how everything's done. I think you're right. There's going to be like some of the places that are made more for convenience, such as McDonald's. No one ever gets excited to go sit and dine at the McDonald's. Yeah. So it, and the play places with everything going on, I think those are going to die out pretty soon too. So I agree. I think a lot of the places that are kind of built more for convenience, like McDonald's and a lot of the fast food chains, they're probably going to kind of go more into either drive-through or delivery. And also, I think just anything that makes things more convenient for people is a good thing to invest in. Like the stock you were mentioning, it made it easier to pay people. Square. Okay, I had a brain fart there for a minute. I kept on thinking PayPal, but I'm like, no, it's Square. So like with Square, it made it easier for transactions and everything. So it did very well. And I think the Arcimoto, it's going to make delivering a lot easier and a lot faster and a lot more efficient, because it's a smaller vehicle. It's more maneuverable. You can do a quick delivery, go do the delivery, head back to the distribution center or wherever they're making deliveries from. Mm-hmm. And it's going to be a lot faster, and it makes it more convenient for people, because nowadays almost everyone seems to have a hustle and a side hustle. And if you're taking time out of your side hustle to go to Walmart or Meijer and do your grocery shop, and most of the time you're going to be losing money. Whereas if you use like the Walmart Plus service and they're using the Arcimoto, it's making your life easier so you can concentrate more on your side hustle and accumulating more wealth, or even just relaxing, which none of us ever do anymore. But so I think any service or industry that makes that provides convenience for people, I think will do well. So I think Arcimoto will do well. Obviously, Square's already done well. I'm thinking the Walmart Plus same day delivery service. I think that's going to do well.
Yeah, definitely. Now, speaking of something that needs to be my kill, and I'm just waiting to get rid of, is Jakks Pacific, and they are not making anything any better for anybody right now. Because what happened was they did a reverse split. Now, what happens with a reverse split is a company is trying to figure out a way to make them appear more profitable. So, I had 57 shares in Jakks Pacific. Now, they make toys, they make action figures. For the longest time, they had the WWE license, I believe. I don't think they have it anymore, but because you'd think if they made wrestling figures still that they'd be a more profitable company. But there's has been some good PR about upcoming things that they might be partnering with. I think there was a Disney connection at some point, but for the longest time, this has been a dog. And with the reverse split, my 57 shares, well, they turned into 6, and my average cost turned into $8.30. And this stock has never been valued that since the reverse split. So there's such a high margin for me to jump with this thing. They would need to have like the greatest PR ever for this to spike. I think it's going to be like kind of a dead doornail for a long time. So do I want to hold on to it, or is it something where I'm just like, you know what? Maybe I'll do a Trico play and just wait for this to get the least amount of loss. Get rid of it because I am sick of looking at it.
Stealing from my playbook.
I did clean up a little bit of my Robinhood portfolio and my Webull portfolio because I did have some dogs in there. But I only did that because the stuff that I had bought into otherwise was doing really well. And so it made up for the losses. I do want to mention, because I'm hoping maybe for next week or Monday or next Saturday, I want to get into paper trading with Webull, and I want to bring up my phone and do that, but I just wasn't prepared for that for today. But there's another one that I'm looking at that I'm kind of dating, and it's a completely separate from my other one. There's a couple more things that I bought into just through Webull. But what I did was I sold off some of those dogs on my Webull portfolio, used that money to buy into after-hours stock. Now, one of the great things about Webull is you can make after-hours plays up until about 8 p.m. You can't do that on the Robinhood app. So a lot of this activity that happens after hours, you can't cash in on. It's another great reason to sign up for Webull, despite getting, you get 2 free stocks if you make the $100 deposit, but you'll also be able to watch the market in longer hours if you do this or the after hours play on it. So one of the things that I was looking into is this UAVS. It's Ag Eagle Aerial, and they basically make farm drone technology, and that's their specialty. They're building a new plant out in Wichita, Kansas. I think primarily it's the cannabis industry that they support, but I mean it's all farm drone technology, and they've got some other purported partnerships. Like there's a rumor that they're going to be a delivery vehicle for Amazon, like they're partnering with Amazon for drone delivery. So this is one that I've been I got in on a really good position. I got in at about $2.50 on this one. Currently trading about $3.30, and it's been a constant grower, and happy about that. So this would be like a second one for my Mary Date kill, but strictly doing this one through the Webull app. But it looks like a good solid company. Like I said, they are expanding. They got their headquarters or whatever they're putting in Wichita, Kansas, and just the center of agriculture in the Midwest. And if you have large farms and you need to look at your fields, fly over with a drone instead of driving out there with a tractor. Why not?
Yeah.
Cool. So what do you have for us, man?
All right. Let's see. For a date, I actually did this as a date this week. It was the UAVS.
Oh, cool.
Yeah, you know me, I get a little chicken hearted.
Did you already sell it?
Yeah.
Oh no.
I bought it. I bought some shares for $2.47 a share, and then it was doing like a little go up a little, go down a little, and I'm like, oh my gosh, I'm gonna lose out. So I sold my shares for like $2.53 a share. So I made like 6 cents a share.
Wow, that didn't take very long at all, because when I told you about the stock, I hadn't bought it yet. And then I went and took a shower or something, came back, and it was already at like $2.59. I was like, oh crap, I better buy this if I'm going to buy it now. And I'm glad I did, because it's been hanging around at like $3.30, $3.50 for a while. But
yeah, I should have stayed in it. I would have been up about 80 cents a share right now. And I even on our social media, there's a meme about buys a penny stock, sells it for 6 cents a share or something. And I'm like, oh yeah, that's definitely me.
and feeling like you made it big.
Yeah. So that's
it seems like it's a really good company, and I would still buy. I would buy in at this price. I don't really have any more money for trading right now, but this is one that I'm definitely looking to probably load up on. A lot of my stocks seems like it's going the EV, vehicle, drone technology, because I'm a tech guy, so I go towards that. I love. But another thing I think with some of the DD that I saw with UAV, and I think I shared this with you, is they've got partners with AMD, NVIDIA. I think Apple is listed as one of their partners, and so it seems like a really good play as far as technology goes. Oh wait, no, I'm mistaken. That was OSS that I was telling you about.
Oh, okay, yeah.
Yeah, the one-stop systems. That's the ones that have like the NVIDIA, AMD, NVIDIA plays on. No, the thing with UAVS, Ag Eagle, is the possible Amazon. If that PR gets announced, this is a $10, $15 stock.
Oh, exactly. Yeah.
Almost overnight, probably.
So yeah, I'll probably buy some more back into there, because I definitely sold it too soon.
Did you check out OSS at all?
Yeah, I was looking at them. Maybe on Monday. Right now, I'm trying not to buy too much, because I'm really thinking another big dip is going to come, and I'll be able to get everything on the super cheap. So I've been trying to squander any cash. I right now about 1/8 of my portfolio is cash that I haven't invested yet. So I'm trying to hold on to it in case there's another big dip. But yeah, OSS is looking pretty good.
They're down a little bit from when I first heard of them, so it's a good time to jump onto this one. $2.50 a share, but they do have the plays with those major tech brands, and they're producing operating systems for autonomous vehicles. That's their gig. So it fits right in there with my portfolio with drone technology and EV vehicles and all this other stuff. So
exactly. And I think that's where a lot of things are moving towards. Like I work in the automotive industry a little bit as like my day hustle.
Yeah.
And that's all they ever talk about is like automated vehicles and autonomous vehicles. So it's definitely where pretty much everything's moving, because it also kind of goes in line with my philosophy of things that make things more convenient for people.
Yeah, exactly.
Will be a big seller. So, if you had a car that could, if you had an hour commute and you had a car that could drive you on your hour commute, that frees up an hour of your day that you can work on side hustles. You can day trade during that hour, those kind of things. So
one of our potential guests that I want to try to bring on is a friend of mine who works for Johnson Controls. He does nice. Interior design work, and he worked on a big project that was unveiled recently at one of the big auto shows. But it was basically the concept of an autonomous mobile office. And it was pretty cool looking, so I want to try to get him on to talk about that at some point. But
Oh, that'd be awesome. Yeah.
yeah, because we waste all that time. I think of all the time when I was driving to cons.
Hmm.
It'd be nice to just kind of relax a little bit more and get some work done while you're on that drive. And I think, I love driving, but I love driving. I don't like just steering for hours at a time.
Exactly.
Just like kind of move it slightly over here, move it slightly over here. Oh, look, a turn. This might be fun. If I'm driving, I want to be like, okay, looks like it's safe. Floor it. Oh, let's take this turn. Yeah, that's what you want to do, and that's driving. But as far as steering, let's let the machines do that. Now, we're always going to get stuck because I kept seeing Tesla articles where a Tesla drove off the road that was supposed to be autonomous, because that's something you can get as an option, is the autonomous driver.
Mhm.
And I guess the bugs are still kind of there, but I mean, if you've lived with technology as long as us Gen Xers have, it's like, is it going to blue screen of death at 55 miles an hour on the freeway? I hope this thing doesn't have windows on it.
Yeah.
Oh, cool. All right. So what's your Mary then?
All right. My Mary, I haven't actually performed the marriage ceremony on this one yet, but I'm looking at Pfizer. I have an order for when it gets down to around $34 to buy some, so I'm kind of waiting to pop the question, you could say. It seems like a good company. They've been around forever. Good dividend yield. It's around like 4%.
What's their ticker?
Oh, I'm sorry. PFE.
There it is.
Mm-hmm.
Yeah, around $36 right now.
Yeah. So I'm hoping, it might drop a few dollars. I can pick it up for around 34. It's still a good price at 36, but I'm always trying to buy on the dip, and that way, even if it's only $1 profit, it's still some profit for me. So, and a good dividend yield. They've been around forever. It's kind of I know I stay away from pharma stock, so this is very in the pharma family, but I have some pretty good confidence in it. So I got the order in for when it gets around 34. I might get impatient, buy it at 35. We'll see, I guess.
Yeah. Well, this is blue chip pharma, though.
Mhm.
It's not your fly by night. I hope this thing gets a Rona vaccine so it makes money.
Yeah.
We've lost some money on those plays before.
Oh yeah. I think, did I go into my Moderna story last week?
Yeah.
Still kicking myself about that.
Wasteland there.
Yeah.
It is what it is, though, and so yeah, that's this is a good play. I think if anything, medically becomes required in our future with post-Rona or whatever, you can definitely bet Pfizer is going to be one of those companies with their fingers into it.
Oh, exactly.
So I would think any of these small cap companies that are like pharma related, once they have an one of the bigger ones is going to buy them, snap them right up. So.
Oh, exactly. And I don't know. I just figured Pfizer's a good play. They do different medical things, and as the population gets older and everyone's living longer, I think we're already seeing the healthcare field and industries becoming huge because people are living so much longer, and just the stress from modern life is making us kind of not as healthy as previous generations. So I think this will be a pretty good bet as far as growth and everything, and they got a good history of paying out a PE or dividend yield. So
Nice.
yep. And then for a kill, I'm looking at ENSV.
Oh gosh, I have that stock too.
Yeah. you can feel my pain, huh?
I can in Surfco. Gosh, I almost had this one up as my kill too. Talk about a stock that's done very poorly. Gosh.
Yeah.
We'll go right ahead. Tell us how poorly it is.
Oh, let's see. I bought it. I bought a lot of shares because the shares were so cheap. I bought a lot of them at $23. Well, 23 cents. 23 cents. It was a little over. It's like 0.2 236, so a little,
Yeah.
almost 24 cents each. Right now, it's around 16 cents each. On the surface level, it seems like it should be making money right now because it, it does fleet services and a lot of things are being delivered and everything.
Well, it's fleet services for oil.
Yeah,
So
yeah,
it's tied into the volatility of the oil market right now. I'm sitting on 100 shares, and I was in it for 22.9,
Mhm.
almost 23 cents. So right there with you.
Yeah. Oh, exactly. I think if they were delivering anything besides just oil, they'd probably be doing well. But oil's not doing well right now. So
Yeah, if you look at their 1 year performance, they're down 64%.
oh man, yeah,
for their 1 year performance. So that's really, really crazy. I mean, it's and maybe this would be a good long play. I mean, I'm losing $6.81 so far. I can afford to lose that and just kind of stop looking at it
Mhm.
on the hopes that this would spike to $3 or $4 because transportation of oil, as soon as there's a market for it, because again, we're not driving.
Yeah.
We're not driving hardly anywhere now because of the Rona crap. And once we get more mobile again, the demand for oil will go back up. We'll start bleeding into those reserves, and companies like Conservco can start making money. Now, the only thing that I would hope that doesn't happen is the company becomes insolvent and goes away, because we've seen that happen too.
Mhm.
And it becomes a OTC pink sheet thing, and then eventually just all the money goes away. But I'd be out $22 total. Right now I'm just out $6. I think hopefully oil will kick back up again, and stocks like this will be a play. So I don't think I'm going to get rid of it anytime soon. But it's definitely one of those things, is like, once it's in profit, that might not be a bad idea.
Oh, exactly. Yeah. I mean, I'm not going to sell it right now because I hate taking a loss. I'll probably hold on to it, and when it starts going up in my usual Trico fashion, I'll probably sell it at 25 cents, and then I'll shoot up to $1 a share.
I try not to check my portfolio that often. I'll check it in the very beginning, especially if I've got some money and I'm going to move some stuff around.
Mhm.
I'll get that done, and then I just try to not look at the rest of the day, because if I know it's going to be just as bad as social media, and I'll turn into like a closet day trader, constantly looking at it and get worried over the numbers. So I try to just put it away, focus on my work, doing my artwork and stuff, and then come back to it after hours and see what things are going on after hours.
Exactly.
That's kind of how I've been living the dream.
That's the best way to do it. I find, especially if I'm trying to do a day trade or something with penny stocks, I get too emotional about it, which is weird because in my day life, I'm not like a emotional person, but if I'm trying to do like a day trade or penny stock thing, I'll, it's like, oh, it's down. Oh no, it's down. Oh, no, it's going up. Oh, it's going up, and I get a little too into it. That's why I've been trying to kind of recalibrate myself towards some dividends or some blue chip stock where it might go down a little bit, but it's not, it doesn't have the highs and lows because, I think I just do better with something where I can just buy it. If it's down $1, it's okay because I'll get $1 in dividends that year, so I'll break even.
Yeah.
So I kind of refocus my stuff on that.
Yeah, another one of my brides is on sale. Workhorse. We've talked about them in the past too.
Oh yeah.
Down to $14.90 a share. So I'm in the losing bracket right now on my shares, but this is a stock that's been north of 20. They do have their EV fleet vehicles. They're nice looking trucks, and I think this is another one of those plays where it's going to be a lot bigger on the opposite side of Rona if we can ever get there.
Yeah,
they have upcoming contracts with the post office, and I think even UPS for their trucks. So you're looking at a company that could foreseeably replace gas vehicles for major fleet postal carriers and services. This stock equal easily 4X's in that environment.
Yeah. Oh, exactly.
Cool. All right. Well, I think we've had enough stock talks. I know we wanted to talk about something kind of crypto-ish. Did you have a chance to check out this?
Yeah.
Amazon, this CoinDesk article about Amazon should have been tokenized.
Yeah, I was checking that out. It's really, really interesting. I'm still not sure how I feel about it because it's so new and kind of innovative and almost foreign to me. It's hard for me to, you know what I mean? Like, I'm kind of like a late adopter to a lot of technology and a lot of new ideas. So, I get my old man mentality where it's like, well, that's different. Like, that's not how it's always been.
Get that thing out of my yard.
Exactly.
Yeah, well, let me do my best to kind of explain tokenization, because I did get a message from our esteemed fellow Varian. We have been live on IndieVolt, and we are currently got about 22,000 listeners.
Awesome.
So I want to thank everybody who's tuning in live for our little stock and investment chat, and welcome you to Broke Money Hustle. This program is all about getting us little guys, us blue collar paycheck to paycheck types, to do better with our money. So we're all about education, and we're bringing you along with us as we learn this new stuff like tokenization. What is tokenization? Well, tokenization is a term in the crypto asset realm. And let me kind of parallel this, because I've been learning about a new form of tokenization in the art world. So whenever you go and you buy somebody's artwork that they have hand drawn on physical paper, that's a one of one. That's rare. There's no copies. There's no prints of it. As a print artist myself, I'll make something digitally, or I'll make something real. I'll copy it, scan it in, clean it up, make prints of it. That's not a new thing. We had what's his face with the Campbell soup cans, Andy Warhol, who was like the innovator of making prints of artwork. The old printmaking fashion prints. But it's still doing that. You'd have a numbered series, limiting it or something like that. Well, that is available in the art world now through the non-fungible token. Now, what a token is, what tokenization is basically attaching an asset, something to the blockchain. And this Amazon Prime article talks about how the Amazon Prime membership should have been tokenized as an asset because of all of the positives they've built up into it. It's almost a lateral to stock trading, where with stocks, you're buying a piece of the Amazon company. With tokenization, you're monetizing your membership. It's basically monetizing your membership, and the value of that asset grows as the company grows. So it's a kind of a different way of investing. Now with this I keep stumbling over this word, fungible token, and fungibility in talking about gold and silver currency is the ability to make change. So with Bitcoin, all the other currency type cryptos, those are fungible assets where you can hold one Bitcoin, but you can sell off part of it. You can, if you have a $9,000 Bitcoin, you can sell off $500 worth of it and go take that money somewhere else. The non-fungible token is a set token that you would attach then to a piece of digital artwork. And because it's based on the blockchain, you have a unique blockchain identity, basically like a string of letters and numbers. It's code. This is all code. But that code is a one-of-one code attached to this digital artwork, making this digital piece a signed one-of-one original digital art piece. And there's artists who are selling, let's face it, some pretty crappy things, because I've looked through it, for hundreds of dollars as these unique one-of-a-kind digital pieces, and they can become one-of-a-kind because of that tokenization. So this is something that I'm newly researching and getting into, and trying to figure out if there's a way, because I'm an artist as well, that I can bring some quality to the digital tokenized art space. Does that kind of clear up what tokenization is for you?
Yeah. Yeah, definitely.
Now, what are some of the things from this article, otherwise, that you wanted to talk about?
So it seems like from what the article's saying for BNB, like letter BNB, it seems like it's doing well. Like it's working good on that space. Amazon isn't really doing it right now because they have shareholders and everything, like stockholders, and then Prime subscribers. So like what it seems like is on here it would basically be like combining both. So if you're a Prime subscriber, you would have a lot of the benefits as a shareholder, which sounds good because the shares are really expensive, but then Prime is very affordable. So it sounds like a really good idea to me. The only thing that throws me off is in the article they keep talking about socialism. So I'm like,
Yeah,
wait, no.
I did not get that. I did not get that context whatsoever.
Yeah,
Because essentially, you're monetizing something that you want, that you buy, and turning it into an asset.
Mhm.
I don't see how that's socialism at all. I think maybe they're trying to connect it as to a way that the public is funding the companies, or because I mean, socialism requires government intervention to be part of it.
yeah,
And there's no mention of how, like, this would be the nature of crypto is for it to be what is it DeFi, brain farting on the term here, decentralized.
oh, okay,
So
yeah,
so like with Bitcoin, it's a decentralized currency, meaning there's no government that can manipulate its value. It's like gold. Gold is that gold is a decentralized asset. There's no way of manipulating the price. The price is the price, and it regulates and corrects for fiat currency. That's why it fluctuates in value, and it's wildly high now, because almost all fiat currencies over the globe are worth almost zero because they're not backed by gold anymore, and they're backed on these Keynesian debt economics, which we got into earlier, which is why in some foreign countries like Zimbabwe, you have like a $1 trillion bill.
yeah,
It's just these phony baloney numbers based on debt, not based on something hard as an asset. And with digital assets, the reason why they become assets is because of that blockchain technology that allows for unique, uncorruptible, unhackable sequences.
Mhm.
That have to be, the term mining comes from your computer verifying the math. So whenever a coin or a token is mined, becomes in creation, the landscape of the computers out there that service as miners, and there's a new form called stacking, similar to silver stacking, staking, where because people now hold enough of these coins, that is the basis for legitimizing the new ones that are being minted. Whereas with miners, it's like making sure the math is right, and then they approve it, and it becomes mine, and it becomes this unique digital ID. So that's why it's an asset. It's something that it's not incorruptible, non-hackable technology. There's so many checks and balances built into the system. There's no way it could be faked.
exactly.
I mean,
And it sounds like in here with tokenization, you won't have the huge ups and downs that you would with a stock, right? It would be kind of more. You wouldn't have like the huge changes and everything like you would in a stock. It'd be a lot, I guess, a lot more safer. It sounds like.
yeah, because it behooves the company to build value into their brand. And what you're seeing with, like, recently with Chainlink, for example. Now, Chainlink is a coin, token, whatever you want to call it, but it's not monetary. It's tech. It's more of a tech thing where it's the ability for a bank in Switzerland to talk to a bank in Istanbul, for example, instantly. That's kind of what Chainlink does. Chainlink is like the link, literally link, that uses makes digital currencies have access to the blockchain and be, that's kind of a really stumbly thing. But because Chainlink has new adopters, new partners, like a stock, it went up in value, and it shot up from like $2.50 a coin to $7-8 a coin. So there's value added. And what, like with with Amazon Prime, because there's been so much value added. If it had been tokenized from the beginning, you'd be looking at Amazon being a Bitcoin, basically.
Yeah. Cool. Yeah, I think it seems just like that's kind of how things are moving towards. So I think we'll probably see a lot of tokenization of assets in the future. And I'm definitely open to it. I'm still just kind of wrapping my head around it because like we grew up with stocks, and so it's just a matter of kind of wrapping my head around kind of a new way of doing things.
Yeah, and there's other applications as well in crypto. There's I've been looking at some of these Web 3.0 things, and that's basically what blockchain is. It's the next iteration of the internet, fully decentralized. So, for example, a social media application on the blockchain would not have the overbearing censorship that you see on Twitter and Facebook. There wouldn't be the centralized controls controlling it. It's a free, open environment that is based on the tech of the blockchain, the algorithms behind the various coins in the blockchain. So you've got examples where people are creating their own Web 3.0 blogs, these blockchain blogs, and their actual articles have monetary value based on how the upvotes go from the user base.
Oh,
so
nice.
you write this really cool article about American history on there, and everybody keeps upvoting it. The value, the tokenized value of that article is monetary, and you can actually cash that out into some form of cryptocurrency, which then through other means you could turn into US dollars or whatever you wanted down the line. But yeah, that's kind of the way we hope the internet goes. Now, I know there's going to be a big push from governments to try to control this because I don't want human freedom.
Yeah,
that's a negative on their balance sheets. And so look for more fights in various congresses and parliaments to try to regulate something that should not be regulated and is purposely built to not be regulated. In fact, for those of you who don't know, the origins of Bitcoin are based on the 2008 crash, the giant housing crash, the money crash, the bank crash, the bailouts. That was like, the white paper that was released to basically invent Bitcoin was all a response to that, of creating something that could not be manipulated by outside forces. So, as long as, there's no way for them to get their claws into it, there's no reason for it to not grow. It just needs to be adopted. So if you're listening to this, go buy some Bitcoin. If you're in Australia, I've heard that you can start buying Bitcoin in the Coke machine, using Bitcoin in your Coke machines.
Oh, nice.
There's even, if you look for a guy on YouTube who Crazy for Cryptos, there's a service. I don't remember the name of it. I think it's called Purse.io. It allows you to shop on Amazon with Bitcoin. So the way it works is you get a huge discount depending on how much time you want it to take. So, for example, if you go buy let's say you're going to go buy a lamp on Amazon. You find the product you want. You find the product's code, the address for the code. You go to Purse.io. You type that into your account, and then you'll see various bids for the time that people want to buy this. So, kind of essentially, the people who are the buyers on Purse.io, they have all of these gift cards. They use gift cards for Amazon, and those gift cards are used to buy the product and ship it to you. But in turn, you're getting some sort of, you're able to use your Bitcoin. And so you're trading your Bitcoin to people with Amazon gift cards through this service. They buy for you. And if you're willing to wait a longer period of time to get your product, you get a steeper discount on purchasing the item. So you can save like 20, 30% if you'll wait a week or two for somebody to buy it for you with a gift card by trading in a little bit of Bitcoin. So it's not exactly a one-for-one. It's kind of a weird service, but I mean, this is kind of the way adoption happens. We're finding ways to use cryptocurrency as regular hard currency. And it's, this is the Wild West of it. So if you want to become a crypto millionaire, there's lots of them already who were the early adopters when Bitcoin was $12 a coin. Gosh, I was skeptical back when it was $700 a coin. Which I wasn't skeptical then, but it's the, FOMO. I didn't have FOMO back then, and 2020 hindsight's 2020. So
Exactly.
but yeah, this is something definitely we want to learn about. We want to teach you about. We need to learn about for ourselves, because you don't want to be left behind with this, because this is going to be the new future.
Yeah. Oh, exactly. So yeah, I think a lot of the tokenization assets, I think that's definitely where everything's going, and with the Bitcoin and Chainlink and stuff. And like you're saying, with the government's trying to regulate it, especially if people are making money on it. I'm sure the different governments are going to want to come in and tax some of that money everyone's making.
Yeah, and that's one of the dangers with crypto right now, is that if you try to convert it to USD, that's something that's still trackable that you'd end up having to pay taxes on
Gotcha.
as an income. So it behooves you to find a way to use the currency without converting it. And that's what people are trying to get with adoption, is to be able to use the currency without having to turn it into some sort of fiat thing that then suddenly becomes taxable and as income. So anyway, that's that for that. You have anything else on your plate, man?
No, that's pretty much it. I'm glad we went over the tokenization asset thing with Amazon and everything, because when you sent me the article, it was really interesting, and but I'm not really familiar with Bitcoin, so I'm kind of glad you were able to kind of go over it and everything. Kind of explained it a lot better than what I thought the article did.
Yeah, the article, well, this is CoinDesk, so this is assuming you're already into crypto from CoinDesk.
Oh, gotcha.
It's an insider. That's like the market watch of cryptocurrency is CoinDesk. So,
okay.
You have a good resource, though, to learn more about it and to read articles like this, is because we want to continue this education. And we're glad to have everyone who's listening live on IndieVolt and everybody who's downloading the podcast off Spotify, Google Podcasts, Apple Podcasts, wherever you get your podcasts. We want to really thank you for supporting this little endeavor of ours. And we hope that we're becoming, we're useful and entertaining. We're trying to educate ourselves, bring you right along with us. And hopefully, a rising tide lifts all boats. If we can become successful doing something, we teach you how to do it via this podcast, or we're looking at currently trying to develop some courses available on Gumroad at some time in the future, where we kind of break down some of the stuff that we've been learning in our, as TJ is a college professor, I've been a professor myself. We want to use those educational skills to try to disseminate this information. So we're trying to develop some affordable coursework that people can go through to learn things like branding and basic business practices and selling yourself, things of that nature. So look for those later on down the line. We'll be telling you about them at nauseam, I'm sure, once they're available. In the meantime, if you're on YouTube and you look down in the description, there should be links for Webull and Robinhood and Acorns if you want to get on those. Take advantage of the market, put your money somewhere where it will grow better than putting it in a traditional bank. So for my co-host, Trico, my name is Eric. Thank you for checking out Broke Money Hustle.
This is Broke Money Hustle. And now here's Broke Money Hustle with Trico and Eric.